Our next guest says that there's some serious FOMO, fear of missing out, that's going on in the market right now. Joining us right now with that is Amy Wu Silverman. She's the head of derivative strategy at RBC Capital Markets. And Amy, who's feeling like they're missing out? Because I'm feeling like I've missed out on a lot of things this year, but not necessarily the markets.
Certainly, I feel like in general, everyone feels like they're missing out. But, specifically with regard to the markets, it's actually more the institutional side rather than the retail side who feels like they're missing out. If you look at CFTC data and positioning data since the beginning of the pandemic, this group of asset managers were the most underinvested. So essentially they missed this big wave that we saw in growth momentum and tech. And now, after a month like November, they're seriously considering how to position for the potential recovery as it relates to value and cyclicals and the like. So, that group is, delicately putting their toe in the water. And when that wave comes, it will be fairly large.
I mean, I guess that explains why we keep seeing the stock market hit new highs, even though we're seeing new records on every kind of bad metric when it comes to COVID, from hospitalizations to deaths to new cases that are being found every day. This group, the institutional investors, are they what you would traditionally consider the smart money, or are they traditionally counterintuitive to where the rest of the market is?
Yeah, generally when pundits say smart money versus dumb money, it's usually the institutional professional set that would be the smart money. And what's been interesting is in some ways we've seen the trends during this pandemic actually led by retail, which you traditionally don't see. And, even one wrinkle to that, because I focus specifically on options, we have seen just an extraordinary amount of activity, specifically in options. Just to give you two stats, Becky, usually in November, you see kind of daily 13 to 15 million in call option volume. That's from last year. This year, we saw 35 million. And a lot of that is, again, driven by retail, this kind of the same cohort that drove the tech exuberance you saw through call option activity. You're seeing that through November as we got, positive vaccine news. And, I'd be very interested to see if that trend continues. It's certainly been driving the market so far.
Amy, what happens on the rare occasions when retail leads the way and institutional institutional money follows? What's the fallout?
Yeah, so there are a couple things that have happened that if you don't look at derivatives closely, it's kind of under the hood. But I would characterize it as someone who's been in the market purely in derivatives for 20 years, that some of the relationship breakdowns, Becky, that we've seen are truly historic. So starting in the pandemic and even now, we're seeing imbalances between the call option activity and the put option activity. That's just not normal. That's not sustainable. And yet we continue to see it. And one thing that happens is this can perpetuate technical cycles in the market on both sides. So, to be more specific about this, when we saw tech really rally in August, it rallied even more. I'll give you Salesforce.com CRM as an example. When it was supposed to have earnings in August, it had a 7% implied move on that earnings day. It ended up moving up 26%. That's because of options activity, Becky. And we're also continuing to see that now in the number of names like Tesla, but also the big tech names and now the cyclical names. So, one technical piece of jargon I'll throw out is we look at skew inversion. So meaning how imbalanced call option bullish activity is versus bearish activity. When this starts to get extremely imbalanced, it means we could start to see some of these feedback loops kind of continuing on upon themselves, almost in a self-fulfilling prophecy. That's related to something called gamma in options, but essentially is a technical driver that exacerbates up moves even more and down moves even more. And right now we're seeing it exacerbate up moves even more.
Shepard Smith here. Thanks for watching CNBC on YouTube.